I'm here today with Hugh Yarrow, lead portfolio manager on the Evenlode Income Fund. This fund sits on the Chelsea selection buy list. Hugh, with the EU referendum date now clearly set, do you think it will have an impact on the UK market, stay or vote to leave?
Well, whatever you think about the long-term impact of Brexit, I think clearly it would cause a lot of uncertainty and volatility in the short term. I think that particularly manifests itself in the currency market in terms of the potential for the pound being quite weak in the short term. It would also clearly raise some interesting political uncertainty. And then in terms of sectors of the UK market, probably the most impacted would be the financial services sector that's benefited a lot from EU membership over the years, and then perhaps also some uncertainty over the domestic UK economic sectors like the housing market and the impact that a Brexit might have on them.
Yeah, and then within respect of your own fund, have you made any positional changes in the run-up to Brexit, or is it business as usual?
It's business as usual. The way we always put it is we aim to predict, rather than predict the macroeconomic and geopolitical, we aim to insulate the portfolio from those events that may or may not happen. We focus on well-diversified, resilient businesses with strong finances. Many of them are global businesses. Only about 20% of the revenues in the fund, despite the fact it's a UK fund, come from the UK. So in fact, weaker sterling in many ways is good for those businesses.
And finally, as an income fund manager, we read about big swathes of the FTSE 100, particularly having dividend cuts. Has that affected your ability to derive income for the fund?
Well, we have a focus on asset-light, cash-generative businesses, and actually a lot of the dividend cuts in the UK market have been in more capital-intensive businesses, so the portfolio has been quite well insulated from that trend in terms of dividends. But we focus on repeat purchase business models, which tends to help with dividend sustainability, whether that's long-term contracts like subscription in software, or whether it's selling soap or shampoo or beer. And we also focus a lot on free cash flow and balance sheet strength. Both of those factors tend to provide you with a much more steady dividend stream over time.
So those sort of headline dividend cuts won't affect the Evenlode Income Fund in the short term?
We are still very much aiming for real growth in the dividend stream over time, and the portfolio has been well insulated from the dividend cuts that you've seen.
Thank you, Hugh. Thank you very much.